Okay, so just a quick update. Now in our previous video, we was looking to sell at this 5-minute confirmation, right? Now we have this 1 hour demand right here that's been mitigated. It hasn't been penetrated, but it has given us 5-minute confirmation. Now what do I mean by that? So this gray area is the 1 hour demand. And then if we look when we came down, we have this 5-minute trend line break, right? So we have this 5-minute demand. Now this is 5-minute confirmation at a 1 hour zone, which kind of meets our trading strategy, right? So we're gonna execute still because we don't know what could happen, right? Our job is to identify and execute. So I'm looking at this zone. I'm gonna set a limit here. I'm just gonna hide this in the meantime just so it's not crowding up the charts, but we still have the setup right here. And then the next zone I'm looking at is we have this 1 hour demand, right? This 1 hour demand right here. We also have this 1 hour demand. Very interesting. So we have this 1 hour demand right here. And then we have this 1 hour right here, right? So this zone will probably consider 15 minutes because it's tapping into the 4 hour. So let's go down to the 15, see if there's anything. Okay, so we'll leave it, we could leave it at that. We could leave it like this, right? That would be, see what it looks like on a 5. Okay, we could leave it like that. Now we have that zone, and then we have this 1 hour zone right here, right? Now 1 hour drop base rally, we know we have to go to the 5-minute to get the nested zone. So the 5-minute zone would be drop base rally, this one right here. Right, so that's the 5-minute, right? This would be the 5-minute. So we have a couple options. We do have a couple options. We have this one, and this one. Now I'm just gonna do a quick scan to see which might serve us best, which zone accomplished the most, right? So this zone on the 4 hour didn't, it's confirmation. This is confirmation. It's kind of 1 hour, right? So let's just look at what our zones accomplished, because we have options. Okay, so this zone removed, this 1 hour came down, didn't mitigate. So this is a strong zone, right? We're definitely going to take this one. This zone, drop base rally, came, removed a lot of this, removed this. I mean, they're all pretty strong, so we'll take all of them. You know, they could all also fail, but the outcome is not in our hands. We just need to focus on the process, right? Now, because this zone is used up, the only how we're gonna take these cells is if the market comes straight into the zone and then sell. However, if the market comes to one of these zones first, then we're not going to consider this. So we're only going to sell if the market doesn't tap into these 5-minute zones first. Okay, so create limit 500. $500 risk, 1,500 reward, which is about 1 to 3. We'll target 3, 1 to 6. We'll target 1 to 6. Okay, so that's our first trade. Second trade would be this zone. I think we could go for the highest with this one. So if this first one is a loss, then we would need 10, about 10R. Right, so it's looking a bit complicated, but we'll see what happens, right? And then for the last trade, we have this zone here. Let's see what this looks like on a 1 minute. Okay, so on a 1 minute, extend. Okay, so on the 1 minute, let's go to the 5. So we set our buy limits on the 1 minute zone nested in this confirmation demand area, and should be our entry, stop loss. So if this trade ends up being a loss, that is -1R, -1R. If we make it to this one, we'll be down 2Rs, and we need 9R to get halfway there. So 9R plus 110, so we'll need about 11R. This trade could make it back to the highs, so we'll set it at 11R. Which would be above 5,500. Okay, so we have 4 trades set. You know, we're risking $500 a trade, right? If all trades hit stop loss, then we lose 2,000. If 3 trades hit stop loss, then we lose 1,500. And if only 1 trade wins, then we'll be in significant profit. No, with all this demand in place, it's suggesting that supply could, because if you look at the market, right, where there's a lot of trading activity tends to be a lack of supply and demand. Supply and demand is an imbalance in the market. Demand is where there's more demand to buy. Supply is where there's more supply to sell. Where there's a lack of supply and demand, the market just consolidates. So if we look in this area, we see a lot of price movement, right? So having a supply zone in this area lowers the odds, right, for this confirmation. So this sell compared to these buys would be lower. It would be lower odds, especially if the market taps into the zone before retracing back into the zone, right? But it's just 1 hour. We'll leave it, see how it plays out. But if the market hits a buy zone before it hits the sell, then I'll cancel the sells, right? Because then this demand would be in control. Right now, supply and control. 1 hour supply and control, right? But once 1 hour demand gains control, then we have to look for buys and not sells. right? But right now, one our supply is in control, so we could look for sells. So let me just clean up this chart, see if we can make this more presentable. And we also have this sell idea. So yeah, it's a lot, it's a lot to consider, but we'll see how it plays out. Right, the good thing about this strategy is once you find a trade, you just set it and forget it. You just set the trade, allow the trade to play out, and see how things go, right? So we'll tap back in. Now is 8 p.m. So we'll tap back in tomorrow, New York session, and see what happens.